Friends, it's a pleasure and a privilege to be here with you today for this evening. And I'd like to invite Goel Saab to the stage. Goel Saab needs no introduction to any of us, but briefly, I have seen many investors, but Goel Saab is unique simply because he has a mind of his own, he has a method of his own, and he does everything to his own conviction. You cannot convince him to do anything which he doesn't believe in. In that sense, it's a very rare trait in investors who try to do what others do. He will do only what he wants to do. And everything that he does today with such success is something that he has built on his own. And I deem it an honor to have this conversation with him because I have seen it up close for close to 28 years. And it's been a phenomenal learning for me. So in that sense, it's a pleasure for me to have this conversation. Goel Saab, please.
This is on?
It will be on. Without wasting much time, we'll go straight into the discussion. My first question, Goel Saab, to you. Your early years, tell us about your childhood and where you grew up.
Yeah, I grew up in Punjab, a small town of called Batala. So I did my higher secondary from there. Then my grandfather called me to Chennai. He had a business of steel trading. So when I came here, he called me for holidays because after finishing my higher secondary, so I had 3 months for college admission. So he said, you can be here. So then he put me in the business. So I got interested. So I then didn't go for study. So I started.
So that's how you came to Chennai for a holiday and you stayed on here.
Yeah.
And your business, tell us something about your steel business, how you did your business and what you did in your business which you really liked, what you did differently, a few things.
See, in my business, basically people keep doing the same thing, whereas I always innovated things. So I always like to do different than whole market does so that we can make better profits. So we used to, basically people used to buy some fixed sizes of steel, whereas they have to cut it and then make it smaller sizes and those things. Whereas I used to provide them already the smaller size to their size, which used to work out for us cheaper, and to them it used to work cheaper. So it was just a win-win situation for both.
During the Harshad Mehta scam, you were not in the market,
yes,
but you had an opinion on the market. So tell us about that view which you had on the market and what you were telling your friends.
During my steel business, we were no knowledge about stock market. But since those days, we had to go to the bank almost every day to see how the bank position and all those things, because it was everything physical. So when I used to go to the bank, all the bank staff used to say, yesterday I bought this, today it has gone up. So like that I was hearing for months together, 2-3 months. So one day, my common sense said that there's something wrong because nothing can grow like that overnight. So I told my manager, his name was Som Sundaram, I used to call him Somu. I said, Somu, I believe that there's something wrong in the market, so better get out of market, otherwise your great-grandchildren will accuse you being in the market in this period. So he said, what do you know about stock market? I said, nothing. But I have a common sense which says that this is not something which can grow overnight. So after a few days, momentum was still on, so market further went up. So he made fun of me, saying, Mr. Goel, you may be good in your business, steel business, but you don't know anything. I said, what happened? He said, market has gone up further, you asked me to sell. So I said, you wait for 1 month, then talk to me. So I never used to see, we never used to buy any this paper, Economics Times or any paper, because it was not our need. And there was no channel also which used to give business news. So I didn't know anything what is happening. So one day, fine morning, he called me and he said, Mr. Goel, you have been proved right in the stock market too. I said, what happened? He said, market crashed. And that was the time I thought, when people who are in the market, they are not able to understand that there is, they are not having common sense. The market is going up like crazy and everybody is blindly going after it. So I said, let me start. So I took a plunge in that time. So first 3 months I studied.
After the crash?
After the crash. Then from September 92, I just ventured into stock market with a sum of 50 lakhs. Without knowledge of any of my family members. So, which became around 1/3 less. The notional loss was there by March 93. So it became about 33 lakhs which I invested at 50 lakhs. So my family came to know. So they said, it's not our business, you better sell and come out of the market. I said, nothing doing. Because I had the conviction that this is a very low market. So it can't go below this. Because same thing I have experienced in my steel business too. In earlier, when the steel market fallen below the cost price. You see, cost price of steel producing at that time, so if it was 1500, 1600, the prices came down at 1200. So I said, when the price is lower than the cost, it cannot sustain. So it has to
go back.
So same thing about stock market also, if it comes down to too low, it can't stay there. It has to go back. So then I invested a large amount in April 1993. So which actually was the right time because FIs was invited at that time and all the FIs came in that time. So the market just went up like in 93, 94, everybody must be aware. The market went up. So we made good money for our investment. So, but at that time, it was our first time in the market. So we thought we are very smart. So after in 94, a lot of companies placed GDR. Everybody must be knowing this. So GDRs were placed at a very high rate. So once the GDRs were placed at a high rate, the companies got a lot of cash. So we calculated that the company got 200 crore cash or 300 crore cash. They will be saving so much interest and EPS will go up. But all those companies, actually they didn't use money to repay debt. They did that, they just floated that money.
So, misallocated capital.
Yeah, misallocated. So that then the market came down and all the GDR which were placed at a very high price came down drastically. So when the GDR prices came down to 50% and less, I started buying. I thought this 50% is very low price because FIs I bought say 360, I am buying at 180, I am a smart guy. So but there was no bottom. The 180 became 7 rupees. I don't know how many people know. The GDR came 1%, 2%, 3%. I lost all the money what I made. But only one thing was saving grace. I bought one piece of land of my 93, 94 profit, which was there on ECR. So I sold that land in 97, 98 and restarted my portfolio.
There is one interesting thing which I observed from 95. I have been closely in touch with him. So 95 to 98, the amount of companies which we would have studied, I think we would not have done that much even afterwards. Crazy. So it's like it was like a oasis. Every company you study the result and see whether it's worth, what price you can buy, whether it's worth buying. It's not like today where people just do complete mastery or drill down of 2-3 companies. number of companies. So I'm just going to ask you about how you got that thought that we have to do so much equity research, because I never asked you that question till now.
No, you see, basically I always thought for anything you buy, you have to see the value of it. Once you see the value of it, only then you can buy. No, if you don't know the value of it, how can you buy? You cannot just buy because the market is giving this value. You have to see the value, asset value. So initially, my way of investing was to see the asset value. So I used to calculate what is the asset value and what is the per share asset value comes to. So if it is less than the asset value, we used to buy.
So basically, Graham in investing. That's discount to book value, or whatever you calculate as the adjusted value. You track multiple industries. You bought so many industries over the years. How do you track so many industries? Because it's for one person to do so much. How do you manage that? So many industries. You've done textile, you've done sugar, you've done steel, you've done so many engineering companies.
See, with the time I had a lot of people, a company like you and so many other people. So I had people from textile, people from other industries who were with us. Discussing with us. So we used to get an idea from, suppose it is a textile, we used to get idea from a textile guy. So basically, since I had 25 years business experience before coming to stock market, it was easy for me to gauge how this business will do. So that is how it became very easy.
Friends, this is quite in contrast to a lot of young people who think that doing business is dumb and you can go straight into investing. So whereas business experience, helping the investor form judgments, is something which is a very, very good pointer in this discussion which we have just come to. Coming to the next point, sir, which is dividend, your favorite.
Sir, dividend became favorite after it became tax-free.
Okay.
Because, see, once it became tax-free, so we started calculating pre-tax what is the return we are getting. So suppose we were getting a return of say 6%, the pre-tax is almost 10%. So I used to calculate that way and then I used to see the return. So if it is higher than the FD rate, it's very good.
So you would have hundreds of companies which today you are paying 30-40 PE, which he has bought on yield. Most of the companies which you see where you made high returns were actually bought on dividend yield basis. Whereas you are looking at it today from the other side, you are thinking that it is growth investing. It is actually dividend investing, very patient dividend investing, extremely patient dividend investing, and extended dividend investing. That's been the story. Can you tell about dividend compounding? How you calculate this yearly dividend?
Usually I used to see the growth indirectly, not directly. Indirectly means I used to see a company which is giving higher dividend year on year. So basically that was a filter. The company is growing. That's why the dividend is going up. No, if the company is not growing, the dividend will not go up. So I used to see the companies which are giving dividend year on year better than the previous year. So that was one filter of mine. So that itself was linked to the growth.
So one point which I found fascinating, every year most investors estimate what will be the earnings of companies and how much their portfolio will grow. But you used to compute every year how much your next year total dividend on the portfolio would be. Can you tell us something about that?
See, basically when you are looking at a dividend, high dividend, you are compounding of dividend, that means you are already seeing the growth of the companies.
No, but even you used to calculate how much dividend, your dividend will increase every year, not just the portfolio value.
So that is only because we were buying those companies where the dividend was growing every year, year on year.
So effectively what happened is many companies which pay out a lot of money also turned out to be better allocators of capital, and the PE ratio expanded naturally. You didn't have to go to multiple platforms and tell buy this company, buy that company, no presentation, nothing. Because the dividend kept on compounding at a certain rate, the multiple also started expanding. That is one thing that I observed in this dividend compounding. So you always rank your ideas.
Yeah, that is basically what we do. We first start with, initially I pick up some companies and I make a token investment. So investment is made, token investment, so that I can follow it up. So I keep following up. So those type of companies will be about some number of companies, 70, 80 companies in my portfolio. But that percentage of my portfolio will be hardly 5%.
That's like a laboratory.
Yeah. So it is like a testing thing. So my major investment will be in my core portfolio, which will be around 20 companies, which have 80% of investment. Another 5% companies, another 15% of my money will be invested into the companies which are already upgraded from the first level to second level. That is from my laboratory, I have taken it up. So what I do, suppose I exit in my top holdings, from second level I promote those companies to the first level.
So tell us about your own screener.
Yeah. See, I developed a screener physically. I used to make myself. Quarter on quarter, I used to see that revenue growth, EBITDA growth, and everything. What today's screener is providing, I did in my, I think in 97 itself. But I was doing physically. Then one day Shyam told me, why you are wasting so much time physically? So he took over and he started making on computer.
And you will see one big sheet in which all these companies which he is tracking will be there. And he'll keep on looking at it every day. And then he'll try and make notes on the side and keep on marking comments, what he expects. In that sheet, you will see next quarter numbers he would have written. Then next quarter again, one more bunch will be formed of 60, 80, 100 companies. There will be pencil notes on the side. So when I go, you'll just throw that bundle and see that. So you will have to look at the company and say what is your estimate of that company. This is something which keeps you very sharp on how you pick, because in your mind, if you have 100 companies, how will you know which one to buy next? It's very, very difficult. But he used this very, very effectively. So managing that laboratory is not even looking like a tough task. You are able to naturally do it. That is something which I observed while doing that. So can you tell us about relative valuation? This is a favorite subject of Naren also.
Yeah.
So,
see, relative valuation is very simple. Today, suppose I have invested in 10 sugar companies. Okay. So one sugar company price would have moved up, whereas other sugar company price would not have moved up, because stock market doesn't move everything at the same time. Some companies move up faster, some moves up later. Suppose some company has moved up much higher and other companies have not moved up, I'll shift from that company to the company which has not moved up. So I see both are almost same, but one is value is higher, the another is value lower. So it's a market doesn't give same value to every company at the same time. So some companies move fast, some companies move later.
So how do you use that?
I keep tracking, I just see, I know that this company is going to do so much and is getting value of, say, suppose within sugar company, if some company is getting 20 time value and another company is getting only 5 time value. So I should sell 20 time and put it into 5 times.
Which brings us to the next concept which you have very effectively used, which is switching.
Switching, yes.
So can you give 1 or 2 examples of switching? Maybe in...
Yeah, I have done a lot of switching in my life. It helped me in 2 ways. See, like the one share which has become very favorite for the market, it moves up very fast. And you see, it goes up beyond our estimate also. So I will sell that share. I will not wait that this share can go up still more, because market fancy has caught it. So I'll sell that share and buy some share which is still not moved up. So I can give one instant. In 2009, I bought Relaxo Industries, Relaxo Footwear. So at 30 rupees at that time, and when I sold, everybody was telling this company has very good future. Why you are selling? I said, doesn't matter. I am buying some company which has a better future and it is available same much lower price. So I sold Laxo say at 250 in 2013 and bought KRBL at 20 rupees. So I got about 12 shares of KRBL. Today 12 shares of KRBL is much more than the what I sold Laxo at that time. So my way of investing is like that. So I don't lose even if the share goes up. I have already invested in the share which has more potential to go up.
How do you go so deep into one sector? Because I have seen this in textile, engineering, and now in sugar. Of course, rice is another one. There are multiple sectors, but how do you go so deep into a sector? You go and see all the companies.
That is because of my business equipment, which I have learned 25 years being in business. So I just think when I invest in a company, I am partnering with the company. I am not buying just a piece of paper. I am becoming a partner of this business. So I see it as a business. So unless I go deep, I can't understand the business. So I have to understand properly. So then I can do the consolidate investment into that.
Many people see that you have invested in some company for a very long period of time. You are holding when they have all sold and bought back and done all this. For example, sugar, across multiple cycles. From what I have seen, sugar, 2 cycles we have only studied. We missed the bus 2 times investing. Only 3rd cycle you have bought. But even there, like somebody like me goes out, comes in, goes out, comes in. Whereas you, from 3rd cycle till now, you have stuck to that sector. How do you invest across multiple cycles? There is another example which I can tell you. 2004, we studied Sangvi movers.
Yeah.
You are still not sold. I think you are holding for the last 18, 19 years.
More than that.
March,
19 years.
19 years. So I remember it's February, March 2004 to today. Because my daughter's age is 19. So that is when we studied this company. So how do you invest across multiple cycles, even in stocks which have cyclical nature?
See, take example of sugar. The sugar, we thought, because there is a lot of change happened in the industries, like ethanol was not there in the sugar earlier. So once the ethanol story came into sugar, so we thought it is not going to end in a year or 2 and it will take at least 4 to 5 years. So my hypothesis itself was that I should wait till 24, 25 when the ethanol story becomes fully matured.
So the patience. So in that interim period, you are only focusing on the business and the dividend. The dividend keeps you happy.
Yes.
So growth stocks, there is a general feeling that value investors don't understand growth stocks. Actually, the people who say it are not even growth investors, they are momentum investors. That is the irony. But you understand growth stocks very well. Can you tell us about some of the companies where you have participated in the growth for a very long period of time? Maybe something like KRBL, for example.
Yeah.
It's been very, very long. I think nearly 13, 14 years.
For 15 years.
Yeah. So you have just stuck to it. You have not sold your bought continuously.
Correct.
So, but there is another area also where I have seen you have been very, very sharp. I'm going to ask you about your auto ancillary investing because not many people know about it. That there are companies which you have bought every cycle at the bottom. And sold every cycle at the top.
Correct.
And 3 cycles. I can give 2 examples, if with your permission. One is LGB Brothers,
yes,
which I have seen, and the second is MM Forging. And there are multiple companies. These are I have just given 2 samples. There could be at least I can exhaust both my hands in counting. But these are just 2 examples. How do you turn a company like an auto ancillary into a growth stock?
See, basically the market, their illiquid shares, like as you mentioned, LGB and MM Forge. See, every good cycle, when this sector becomes favorite, people want to buy illiquid stocks, the funds, so they don't get. So since we are holding those stocks, they come and beg from us and we give them the stock. And the same, when the cycle turn downward, those funds have come to us to sell because they are not able to sell in the market.
Which means you go completely against consensus.
Yes.
Both sides. This selling, sir, one thing I have noticed. Tell us a little bit about how you sell, because many people are seeing you only hold, but there is one side to you which is very, very fascinating, which is you sell. Tell us about how you sell.
See, basically, I sell when, according to my valuation, the share is fully priced, and still market, I know market can give much higher price, but I start selling, I start shaving that stock from that level at, say, suppose one stock I bought at maybe 100 rupees, 500 rupees is my target. If the target comes, we start selling. Though I know that market, it can go to 1000 rupees. So I will start selling in a small parcel. Then every next selling will be double the quantity, and again next cycle it will, next price it will be again double of second this. So my average will go up because I am selling at a higher rate much more quantity than the lower level.
So you don't have to worry about starting early.
Yes. So at the end, actually, we are able to get average price of selling itself, which is closer to the peak. So market doesn't remain at peak. So our average price will be much higher. The share will be quoting after 6 months because it falls. So we are happy.
There are shares which you have sold at the peak on the freeze, full quantity. How do you manage that? Tell us a little bit about that.
Because I have got conviction that it is overpriced.
So you are willing to sell against the entire consensus,
yes.
one shot.
Because that is where I can sell quantity. Only freeze is the best place where you can sell the quantity.
So you are shocking and annoying the buyer. Okay. So this comes to another point, that when you are selling, you are also buying.
Yeah.
How do you manage these two tracks? Because while you are selling, you are also knowing what to buy. That's also happening almost in a parallel universe, like kind of thing.
Yeah.
How do you manage that? Because one set you are selling in euphoria,
Yes.
and another set you are buying where there is complete disinterest.
Very easy, you know. See, stock market doesn't get into euphoria for every sector at the same time. Like, for example, in 2000 or 1999 2000, when people had a euphoria in IT.com bubble, which is called, there was old economy shares were dumped like kachra. So basically, though people were thinking that we are fools, we are buying those stocks.
Some companies you should name, because for the interest of the viewers.
Yeah, we bought a lot of companies like Tube Investment, we bought EID Perry, we bought Carborundum.
The entire Murugappa group.
Murugappa Group. See, in 2000, if I give you one example, the company called SSI, everybody must be knowing, Software Solution. It was trading at the market cap of some 8,000 crores. Whereas the whole Murugappa Group was available for 500 crores.
No,
Can you believe it?
There's something more he said at the time, and I'm going to just interrupt and say. He said that compared to this software company, the valuation of Amalgamation plus TVS plus Murugappa Group, all three put together is lower than the valuation of that one company. That is what he said. I'm going to interrupt and tell. So that was a very nice way of putting the contrast. But nobody agreed that the other side is value. The market was so polarized that people thought that if you didn't own those companies, you are not doing the right thing. Whereas today, when you talk about EID and Carborundum and Tube in the current multiples, can anyone guess what was the multiple of those companies in 99-2000? Any guesses?
Govind must be knowing.
So that was the valuation. That was the kind. This is 100 and that is 2. That is the kind.
That is why I call myself a value investor. I just see the value and then buy.
So you were. I remember in '95. I think you had a huge number of companies in your portfolio.
Yes, as I told you, see, we have some
So it
poor,
was a diversified, yes, but the other portfolio was not 80, 100, it was even more probably.
I don't remember exactly, but my way of having commitment money putting into 80 companies and say that will be only 5% of my portfolio. So basically when you sell something, then you start looking at your laboratory, what is still very cheap. As you asked me rightly just now, that why, how you can simultaneously sell and buy something. Because we have a lot of things available in the laboratory. So when you can pick any out of that something which is not gone up.
So it's not very difficult to deploy money.
No, not at all.
Have you been in cash in any market in these
No,
30 years? Because
no.
31 years. Never
Because
been.
I have always got some opportunity otherwise.
So no cash.
Yes.
Talking about the concentration, sir. You are comfortable having
Yes.
high concentration.
I am very much confident. If I have got a conviction in particular company, I don't mind putting 30-40% of my portfolio also.
And you don't have any sectoral cap also. That is another thing. When you go deep into a sector, so you buy many companies in that sector.
Yes.
Some sectors other than sugar which you have enjoyed investing.
The textile,
Any other? Auto ancillary is another one.
auto ancillary.
You are very fond of small companies. You are not that much fond of big companies. I have never seen you like a very large company. You are always fond of small companies.
Basically, small companies have more potential to growth because the base is small. See, large company base is higher. So anything which is high base, the growth will be 10%, 15%. Whereas small company where the base is very small, it can grow even 50 to 100% in a year.
But when you look at today's valuation scenario on small companies, what do you feel?
I don't see as a small cap or mid cap. I see individually companies. So what is in my portfolio, I go by my own.
So you don't look at the
No,
market.
I don't look at overall.
You don't look at the valuation where it's high.
Yeah.
It doesn't disturb you. Where there's 100 P and all that. But whereas in 2000, how did you feel? In 2000, the market was so polarized. Today you're so
Yeah,
cool.
so-
2000, how did you feel?
So we are feeling happy, but people are making fun of us. So
Can you
everybody
tell us a
thought,
little bit about that?
people used to say that doesn't know investment. You know about Uday Raj. The person was under me from 97. He bought some shares of which company?
Visuals of
VisualSoft. For them, some
30 rupees.
27
27,
rupees.
30.
27 rupees.
20 to 10,000.
1 to 10,000. So those kind of people stopped talking to me because they thought they thought they are the masters. We don't know anything about market. So I have seen that, but I don't mind. See, I go what I like. I do what I feel is good for us.
So I'm going to ask you about your conviction. You have very, very strong conviction. In fact, sometimes your view can be very, very strong because of your conviction. How do you feel when it takes time? How do you manage? For example, many things have played out. We have always been early. This is something universal. Even now you're probably early in some idea or something like that. How do you manage that period when you have full conviction and you're early and it's going to take some long time? How do you manage? Because everyone around will be having a different view while you are having this
No,
view.
I don't see what others are making. I see what I am doing. See, I don't compare myself with anybody else. See, this fellow has done better than me. I have done nothing. So, if I do that, then I would not have been, in 2000, I would not have been buying these old companies, you know. See, we actually, if you ask me, you can make much more money in your life if you see the sector, especially when there is euphoria in particular sector, the sector which are totally ignored because they are available at throwaway price. So if you invest in those stocks, you can, after the euphoria gets over, you make highest money in that. See, whatever we bought in 99, 2000, in 2004, 5, it was 20, 30, 40 times. because they were at throwaway price. Not that the companies have done well. The company was undervalued. It was sold at throwaway price. So the value has come back.
So I'm going to extend this investment discipline and ask you about something which is again quite unique to you, which is your personal discipline. Can you tell a little bit about your daily routine?
See, basically, I am very clear. See, for anything, you should have clarity of mind. Clarity of mind comes when you are having a healthy body. Your mind will be free. So, and other thing, you should not be greedy to hold too many information into your brain. So, I have a deletion process. So, the lot of information is so much, noise is so much. So, you have to cut the noise. You take only information which is used to you. Don't take anything other than what is not used to you. So basically, so I have clarity of mind that I should not have information which is not used to me. A lot of people will be surprised. I have a lot of brokers who are sending me daily reports. I tell them not to send me any report. I am not interested in anybody's report. So even if somebody send, I put it to spam, report spam. So I don't see anybody's report.
When was the last time you saw business TV? I don't think you have
remember.
a TV for the last several years.
Yeah, 5-6 years I have not seen TV.
Okay. And you are not on Twitter, you are not on Facebook, you are not on social media also.
No.
Little bit about reading, sir. What is your opinion?
See, basically my life I have learned from observation. I am a good listener and a good observer. So my learning is basically from observation. So whole learning I have got, I have not learned from anybody, I have not learned from books. I learn from my experience by observing and listening to people. So I always feel this is, see, everybody has his own way of learning. So this is my way of learning.
The importance of thinking. You spend a lot of time thinking.
See, basically, see, first thing is you get information, okay? So after the information, if you process the information, processing means is the thinking. So when you think, you process, you are processing that information. Once you process that information, then only it becomes knowledge. If you use that knowledge, that is, you practice that knowledge, then only it is useful. Otherwise, that knowledge will be only temporary. See, if suppose you have got the information and you have processed, it becomes knowledge, and you don't practice it, it will go away after a few days. So you have to practice this. So then only it can be useful to you.
Another thing is this investment ideation. You do it completely almost on your own. In the sense that it's not like you're looking for somebody to give you ideas and then you work on them.
No, it
because
is not.
generally you don't, suppose I'll tell you, sir, see this company. You may see it, but you don't want to own it because it has not come to you naturally. Tell a little bit about that.
No, it's not entirely like that. So sometimes some ideas strike me. It should strike me.
See, that's the point.
See, idea comes from so many people. If it strikes to me, I will look into that. Okay. And if I get conviction, I will buy it.
There are many times when
I will not buy without understanding my understanding. See, I will not buy because Shyam has told to buy this. So I will buy only if I feel that it is good. I get conviction on that.
Now I'm going to go to the next step of that conviction and ask you a question, which is, sometimes in discussion, because we are discussing multiple industries, somebody may be very passionate about an industry while discussing with you. Then you take your time to come to a point where you become more passionate than this person who has given you this spark, the first thing. Then you start owning that business for in bigger parcels, size.
Yes.
Your investment becomes larger and larger, and your conviction you are translating into actual action.
Yes.
This person has already sold and left the party, right? But you are able to manage your conviction entirely on your own. Tell us about that.
See, basically, the idea I must have picked up from somebody, but it's my own conviction. I built my conviction and bought it. So I go by my conviction.
After that, there's no going back.
Yeah.
So even if you get an idea from somebody, you don't have to go back to that person to ask what you must do. By the time you buy, you must know exactly what you want to do, and after that you are on your own. So that individuality is something which completely stands out. And that's, in my opinion, a very, very important thing, because we are always looking for peer validation in our professional investing. So in professional investing, you are seeing who else is owning and who has already sold. And everyone wants to outsmart the other person, either by selling before that person, or by buying more than that person, or buying before that person. In many ways, there is this competitive spirit to do this. But the way he has been owning businesses, because of the sheer patience and extension of time which he gives himself, is not in competition. It's the style of investing which actually takes him completely away from that arena. He's nowhere in that space. He's in his own space. What are your other interests, sir, other than investing?
Other than, I'm passionate of mentoring people in the spiritual as well as the other aspect of life, discipline, keeping good health, not burning your health for the sake of money. So I always feel that health is more important than anything else. What you will do if you have money but no health? So that is what I teach a lot of people about health.
You have been an investor for nearly 30 years, 31 years to be precise.
Yeah.
Now, there are a lot of young people in this room who have just either finished their studies or still doing their CFA, wanting to become investors, and they're very drawn towards investing. If you were to tell them what they should do or how they should, begin, because it's a totally different context today.
Right.
In today's context, if they were to begin and do something, what would be your advice to these young people?
See, basically, I always believe whatever you do, you should have clarity in your mind, what I am doing. So for that, your mind should be free. It should not be having too much of noises. You should be concentrating on some particular thing and having a conviction on that. Then in doing investment.
So, should they only be investors or should they do something else? There are a lot of people who want to only be in investment banking or in portfolio management or only in equity research, who think nothing else in the world is interesting. Do you think that kind of an approach will help?
That depends on person to person. See, for me, if you ask, I feel the stock market is the best place to be. Because you don't have any tension of any business. You ask any businessman how much tension he has. I have no tension.
That is given to the businessman.
I should ride a good horse. That's all. Let a horse do his work.
The interesting thing is, there's so many stables he has ridden, of horses which he has ridden very successfully over these years, and he continues to enjoy his riding. And he's very passionate, in fact as passionate today as I've seen him when I first met him. And this is something which has grown, and this is something which he has maintained, and he doesn't see the market as something that troubles him. He enjoys it every single day.
I will advise people, don't allow market, that is price movement, to become driver of your mind. This is my advice to everybody. Don't allow price movement of the stock market should be driver of your mind. You should be driver of your own mind. That is one thing I will tell everybody. See, lot of people, but 99% people I have seen, the price movement only makes them either happy or unhappy. They don't see that. See, basically, suppose the market is doing well, we feel happy because we have some opportunity to sell. and market is not doing well, we are happy that we have an opportunity to buy something. So both ways you should be able to be happy.
But most people are the reverse. They are unhappy because they cannot buy in a rising market and unhappy because they cannot sell in a falling market. Anyway, I have come to the end of my questions. Now it's time for your questions. Vijay, what is the procedure? They have to send slips. This is a good question, sir. Kishore has asked this question. How do you stay invested even when your holdings fell by 60-70%? How do you develop conviction?
60-70%?
Portfolio markets have fallen sometimes. Portfolio falls from 100 peak value to even 40 or even 30.
It happened in 2008.
So how do you stay invested is his question. Actually, you have been buying actually at that time, not just staying invested.
So basically, we have got conviction that the price will go back. See, we have seen many times the market falls, then it go back.
The next question is on ethanol. Your view on ethanol blending beyond 20%. Do you think there is scope for that? That is the question he is asking. Varun has asked this question.
The scope is there, but it will take time. See, basically, in ethanol making, there are two things you require. One is a feedstock, another is fuel. So sugar mills have both their own. That is, cane they have got their own. Their area is allotted to them, so they get the cane at fixed price, and the fuel is basically that bagasse which they get out of making sugar. So fuel is also there. Whereas any independent ethanol making companies, they have to buy both the things from outside, fuel from outside as well as feedstock from outside. So which in case of, there is no guarantee of that feedstock and fuel prices remaining at constant price, whereas the price for the ethanol will be fixed for a year. So I feel that sugar industry is the major beneficiary of ethanol policy. So in long term, see, these independent distilleries will have very difficult period to ramp up the capacities, because sometimes they will have problem of feedstock, sometimes they will have problem of fuel. Like last year, the fuel prices went up because of Ukraine war. The coal price went up to 25,000. So even agro waste prices went up in relation to the coal price. So they were making losses. Whereas the sugar mills, they were having their own fuel, that is bagasse. So there are no issues.
This is a question by Sabri. He says, when you look back at your life, what skill do you think you missed gaining that is critical for anything that you feel you could have got when you were much younger or something like that? Any skill?
I don't have any idea about it.
Okay. I got more questions. This is from Sahil Jain. When you see the current crop of new investors, what's the common mistake they do and how to avoid them? The
common mistake is basically a lot of people, they don't have their own conviction, they buy with somebody else's conviction. So if you you buy something with the borrowed conviction, then you will be always not knowing when to sell, when to buy.
So handling is bad.
Handling will be bad.
Other than euphoria and valuations, what are the common pitfalls and mistakes which new investors, what are the common pitfalls and mistakes one can make other than euphoria and valuation?
See, basically people are going, as I said rightly, that price movement is become driver of the mind of the person. So they are all linked to their mind is linked to the price movement. They don't see the valuation. Then they get trapped.
As a long-term investor, patience is an important skill. How do we stay patient? Yash Chopra, sorry. Do we engage in other activity, or how do we, or some other hobby? He wants to know how to be patient.
See, basically, I have a formula which is called KCP Limited. I don't know how many people must be knowing. The KCP is basically a company name. So on that, I have made a formula. Is K means a knowledge. See, if you have a knowledge, you will get conviction. Knowledge only drives you conviction. If you have knowledge and conviction, then you automatically get patience. So basically, knowledge drives conviction, conviction drives patience. So once you have conviction, you don't bother because you know that what you have done is right.
So this is an interesting question from Pavan. Why no to IT?
See, I have my own limitations. Like I don't invest into business which I don't understand. See, if I don't understand any business, why should I put money? See, you have a lot of opportunities. Stock market has given you so much opportunity. Why you should go to a field where what you don't understand?
He's asked the same question of why no to banking and why no to pharma also. I just mentioned one sector to see a reaction.
See, banking is basically good old days, 1980s, when we were in steel business. We used to see how banks used to manage their balance sheets. See, see, when I used to go to the bank, auditors were coming there to audit their firms. They were just going after auditors to somehow make their balance sheet right. And also we have seen that bad debts were managed by giving overdraft in the new company and then taking money into the old these things. So that was just rotating, evergreening. So that mindset, still I am not get out of that because I have seen that I have experienced. So I said, why to get into that? We don't know how much is bad debt in the bank. So what they report, can we trust? We don't know.
Why not to pharma?
Pharma, again, as I told you, IT, I don't understand IT. Same way, I don't understand pharma also.
This is a good question from Senthil. How do you assess promoter quality? A lot of investors have trouble with this area. Because how do you really judge a promoter?
That is, you see, basically when I take a decision of doing a large investment, I meet promoter. So I interact with the promoters. So once I interact, I assess the person. So I have got a good quality of assessing a person because of my 55-year experience in business.
So even when sometimes we have seen this very peculiar thing that we are meeting a promoter and telling him your stock is undervalued, why don't you buy it? And he says he can't buy it or whatever. He doesn't pick that. He doesn't even pick the signal that you have to buy it, it's undervalued. And then you still buy that stock. How do you buy that stock? That is a very, very interesting thing that I have observed. The promoter is not buying. He's got some mind block. It's very, very cheap. The stock is so cheap that it is actually not even, it's elementary, but Watson doesn't get it.
So see, basically, a lot of promoters, they don't apply their mind on their stock value. See, everybody doesn't look at stock value. So very few smart promoters are only looking at the valuation of their stock market valuation. That also, it started only after IT has come into IT became a field, one of the field. So all people, you say entrepreneur who started in 90s, they are smarter. They started looking valuation and they are keeping the track. So they also give the information what is needed to the market so that their stock remains.
The guidance and disclosure is very sharp.
So whereas some promoter, they doesn't understand the valuation, they just understand the business, they are only engaged into the business. So sometimes we find that valuation is throwaway price. If you remember, we went to LGB in 2001.
I didn't mention the name, I thought you will sell the name.
See, Vijay Kumar, LGB MD, when I told Vijay Kumar that your share is available at 30 rupees, that time the company total valuation was 14 crore. I think 14 crore was the market cap of that company, LGB Brothers. And it was making 11 crore of profit. And it was 30 rupees share, he was giving himself 4 rupees dividend per share.
He didn't do.
I said, see, you don't understand the value of your share. If market is not giving value, you should buy. Then he started blinking. He was asking his CFO, answer the question. So,
this is a very interesting question, sir. Sunil is asking, okay, I'll ask the question, but I'm going to ask some more questions with this question. What is the dividend yield of your portfolio? That's what he's asking. That's his question. Okay. But I want you to just talk a little bit about how I've seen at least nearly 27, 28 years, you have monitored the overall dividend yield of your portfolio religiously. Tell us a little bit about that.
no, right now see, there are two things. We have to see dividend yield on the investment, not at the portfolio valuation. See, portfolio valuation would have gone 30 times, 40 times. So you cannot expect the yield on that. So you have to see what you invested and what you are getting. So as a portfolio today, my yield will be not more than 3%.
So 3% is the royal yield today.
Yes.
You're saying not more than. Most of the people are at 1.25% or 1.5% yield. That's what I've noticed. This is from Ankit. His question is, why holding in cyclical businesses like Sangvi Movers for long while getting out of secular businesses like Relaxo? Conventional wisdom says the opposite, he says. What made you wait for such? Oh, that's the next question. No, then I'll let you answer this.
So what did you ask?
See, conventional wisdom says that you sell a cyclical company like Sangvi and buy a company which is a secular business like FMCG, you know, like or a Relaxo or something like that. You have done the opposite actually. This goes against the general wisdom which people.
There are two things. There are some companies where you have Sangvi case, the company has lot of cash profit, but the profit doesn't show on the bottom line because of the higher depreciation and higher interest, but the very high depreciation. So we look at cash profit. So we don't look at the bottom of the company.
This is from Yogesh. He asks, how do you maintain high conviction when there are negative corporate governance issues? Like he was mentioning the KRBL issue, which came up some years ago. So he's asking, how do you manage yourself? How do you manage? Because your position is very large.
Yeah.
How do you manage yourself?
See, basically, I have conviction in the business because I know that business even better than the management. So, and I have conviction in the brand value. See, today that company, if you ask me, is available for scrap value. Scrap value, I don't know how I can explain. See, that company will be 8,000-9,000 crores of the value. The company has more than 5,000, 6,000 cash. And the land parcel, what they have, at 3-4 places they have, that itself will value at about 2,000 crores. So basically, and the machinery, plant, everything if you put together, you will be getting at a scrap value. So company is doing well. Only promoter in that, they are not stealing the money or they are not doing something wrong, but they don't understand stock market. Though we have made them told them what they should do, but they are not understanding. So it's okay. We have conviction that this company one day will get valuation. Not this generation, next generation will come. They will change their mindset.
So when do you or how do you decide that your hypothesis, whatever conviction you are having, is not playing out as you thought? Sometimes, rarely it can happen, right?
It happens. Many times it happens.
So when do you take that call? How do you decide that it's not going as per your thinking?
Yeah, once it doesn't go as per our thinking, then we also exit from those.
You exit. Okay. Yes. So it's not as if you wait for something to happen. This is a very interesting question from Aditya. Do you invest into large cap and move weight relatively into large caps in wild bull market rallies? Like now, Now, would you actually use this to sell and move to large caps? This is question.
No, I won't.
Why?
See, I don't see much potential in large cap. See, basically, today a lot of people are bullish on, I've seen HDFC Bank, a Kotak Bank. If you ask me,
Don't pull my leg.
no, no. See, these banks, at one stage, they were doing well and they were getting valuation almost, I have seen at one time they were trading at 7 to 8 times of book. So, actually, they were doing well on the basis of, because PSU banks were made in the Congress, during Congress period, the PSU banks were bleeding. They were giving money to the some people like Malaya and all those people. No? So they had a lot of NPS.
Phone banking.
Yeah, phone banking. So these banks were enjoying because PSU are not doing well. Now this PSU has come back, see from 0.2 book value to, they have come back to 1. Or some banks were trading at 0.5 book value, they have come to 1.5 or say, like State Bank. Or these banks, whereas private sector bank, which were enjoying because of the inefficiency of the large PSUs. Large PSUs were inefficient, so these people are enjoying that. So now if you see, I am seeing in my picture, though I am not investing in the banks, but I still
Study.
Academic interest. I have academic interest even banking. So I don't invest. That doesn't mean I don't have academic interest. So I understand. So now you see that all this 7 book value, 8 book value has come down to 3. Whereas these PSUs, which were trading at Bank of Baroda, is trading at 0.2 book value. And I think State Bank was at one time was trading at 0.4 book value. They have come up to 1 to 1.5. And these have come from 7 to 3. So I don't see, the time may come when the PSU may go to 2 book value and these people come to 2.5 P or something like that.
Now I'm going to ask you a very audacious question.
Yeah.
Where do you think the NBFCs will be if this is going to happen? Because we are having NBFCs at higher multiple than the private banks today. People think NBFCs are kind of, Hanuman.
See, NBFCs are enjoying because they don't have CRR and these ratios, what banks have to give to a lot of money, they have to park with the RBI, whereas NBFC has no rule for that. So that's why they enjoy that benefit.
You think that multiple will stand alone, or you think that will also converge with this, what you are expecting this convergence?
Yeah, it will converge.
Okay. How do you judge the ethics of a management? You have different, some people you really think are truly gold standard. Some people you'll think, okay, they are decent. How do you judge that? How do you judge? There should be
that you can see the withdrawal of the promoters, no? If the promoters are withdrawing huge money from the company as a salaries and all those things. You can see some promoters are withdrawing a lot of money, and whereas some promoters are taking out very reasonable money. So according to that, you can judge. Some promoters are taking away the money. Whereas some promoters like KRBL, they are not taking away the money, they are not taking higher salary also. They are accumulating cash. Because of accumulation of cash only, this company is not getting valuation. Because cash becomes negative on ROC. If that cash is not there, their ROC is much higher. Because they have accumulated so much cash, so we are forcing them to buy back. So at least we have been successful making them to buy back, a small buyback they have done recently, 325 crores.
So it's a general statement to say this time is different.
That is all in every bull run, or this is common with every bull run.
And then people tell next 20 years is not going to be, 10 years is not going to be like the previous decades. What do you think about the scope of value stroke growth investing in the next decade? You want separate opinions on value and growth, but you are not seeing it differently, right? You want to buy growth and value and get growth.
Yes. So I always look at value buying a growth stock. Growth stock at a value price.
Okay. So you think that scope is there for the next 20 years? Easily. Okay. And then this is a question. You have 20 positions making 80% of book, and most stocks are small mid cap. How do you stay put with the volatility? This is by Mithali. And what is the course drawdown you have seen? What is the worst drawdown you have seen? And how do you deal with it? Any other thoughts on any mental models that you follow? Or how do you deal with drawdown? Suppose, like, again the same question. Yeah. We've seen in various cycles, 100 rupee become
20 rupees.
30 or 20 or whatever.
I think 2008, I remember my portfolio became 20%. The same happened in COVID also. I think it became 25% or 30%.
But in Twitter, if you see, nobody has drawdown.
Huh?
If you see Twitter, nobody has drawdown.
Achha.
Yeah. They're always doing well. Yeah. So how do you deal with it? That's what she's asking. It's a good question, actually.
So because I have clarity of my mind, I have got conviction. I think that what has fallen is only temporary, notional.
Nothing changes about your life. You just go about your routine. It doesn't bother you. Somebody is asking about what in your investment experience, what is the best investment you made? Any one company or 2-3 companies you would like to say, and the worst if you like to name a few. It's up to you. You can just say the best and leave it, or if you feel comfortable, you can give both.
See, time to time, I think, as you must be remembering, we bought Pariagro at 30 rupees, sold the same share to the promoter at almost 3,000 rupees, 100 times, which they wanted to buy at 70 rupees. But we sold them almost 3,000 rupees.
So you call that the best investment?
Yeah, it's a good investment now. Okay. 100 times you made within a period.
So isn't it fascinating that he would have probably invested in 700 to 1,000 companies successfully, and he gives a holdco as his best investment. That's a very, very interesting point. Any other companies? Any other names you want to tell?
I feel my investment in Gearville is also very good.
I was just thinking about that.
Because my cost is only around, I started buying that company at 10 rupees share at around 100 rupees. And it went down to, in 2009, went down to 50 rupees. So we invested at even that. So 1 rupee share, my cost was only 10-11 rupees. Then I accumulated at 20 rupees a large portion in 2013, which I actually converted a lot of my other valuable stocks, sold those stocks and bought this at 20 rupees. Like Relaxo, one example I gave. If I see today, my selling Relaxo, whatever I must have lost there, I would have made here. So that is how I keep myself clear.
This is a question. How do you value a company like DVL? I think this Dunseri Ventures. DVL, what is it?
No, I am not into DVL.
Okay. That is a holding company that is now setting up its own BOPET plant. I don't know which company.
No, I have no investment in that.
Right. And then how do you recharge yourself? How do you recharge your health, your mind? You mentioned a lot about health, some little bit about.
See, I have got a very disciplined life. So basically, I have a habit of taking afternoon nap, which is right from my start of business. See, earlier I used to go for nap after lunch, but now since market is there, so I go for nap after market. 3:40 to 5 is my rest time. I switch off my phone. I don't keep anything which can disturb me. So same way in the night I sleep by 9 o'clock. So 8:30 I switch off everything. So that 9 o'clock I gone to sleep. I wake up at 3 o'clock.
And what do you do? What do you do at 3 o'clock?
See, 3 o'clock I get up and I see the previous day mails and WhatsApp and the US market, everything. And then around 3:45 I go for walk. 5 o'clock I come back.
You also run at the end of your walk, right?
No, I don't do now.
Okay.
I used to do.
Okay. So 5 you're back.
Yeah.
And then?
Then I just change over and then I make my own tea, herbal tea, which I take doing myself. So by 6 o'clock I am free. So 6 to 7 I have given slot to some of my people who want to
Talk to you.
discuss with me. So 6 to 7, 7 to 8 I do yoga, which I have been doing for last 43 years. And this is 365 days. 365 days means if I am in the station.
In Chennai.
Chennai.
Okay, right. And every day, 9 o'clock, you're ready for the market.
Yes. Not 9, 8:45.
Okay. Interesting. Do you like anything else? Going out, movies?
Very rarely.
What is your favorite food?
Favorite food, I like both Indian foods only. Either it is South Indian or North Indian.
You don't like all the Chinese
I
pasta?
don't
and all
like
that?
anything other than that.
Okay, I think we have come to the end of reasonably engaging session, I hope. Anyone else has any other questions? We can close with those questions.